Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, kind of a mixed bag. Actually, it started off weak. We closed a little bit up on the day. So a very nice surprise here across the board for equities. But Dow Jones here up 23 points. S&P is up about 3. Nasdaq was the standout performer here, up 11 points on the day, and the Russell backing off just a little bit. We saw the crude actually come down right below the $45 level. We'll be watching some critical levels on that. If you haven't seen the chart patterns, I think it's of interest to watch that. And also the gold, the bond, just kind of going sideways here into this Tuesday trade. But other than that, folks, let's hop into the action, starting off as always with the S&P 500 dailies. So folks, on the S&P 500 dailies, we were talking here about a little bit of this ascending trend line, and if we broke that, some of the areas that we needed to watch to the downside. And so we did actually start to fade down below that trend line, and we caught support at some key areas here. So let's actually zoom into the intraday charts to see how this unfolded here today. So folks, as we kind of take a look at the 60-minute charts, here's that trend line. You can see how we kind of broke down below that today. But right at the 2200 whole number here, folks, we actually caught some pretty nice support. We were actually looking for two areas here. One was the 2195, just because of prior support here. But also we were looking at the 2200s because of that whole number effect. Sometimes it serves as support or resistance along the way. But folks, as we kind of look to the S&P 5s here, we notice that it actually has formed a little bit of a range so far over the last 1, 2, 3, 4, 5 days here. So between the 2210s and the 2195s, I think it would be actually very beneficial for the markets to just kind of go range bound in this area for the next few days. We'll even see on a few charts here how a lot of the charts are starting to form up over the past few days. We'll see that in just a second. But folks, any trade above the 2210s obviously going to be attempted at all-time highs, and if you get down below these 2195s, okay, I think the next place you're going to have to watch out for is the 2180s, and we've talked about why on the 2180s. If you kind of just zoom out here, that's this prior area support and resistance right in this area, right? So here's prior resistance, and then it also acted as support in here as well. So just be aware of those two areas here, folks, as we come into the next few days. Same thing on the Nasdaq. Actually, Nasdaq was a little bit of the standout performer here today. Let's take a look at the daily charts here. So on the Nasdaq, once we broke through these highs here, the 5350s, we came all the way up to these 5400s, a bit of resistance at those levels. If we zoom in here, we can almost see that while the rest of the market had trouble staying afloat today, actually it was the Nasdaq that was powering higher, hitting new all-time intraday highs up at the 5403.86 before fading back down. It's almost like someone just hit a sell button as soon as we came up to those 5400 whole numbers again. Just how we came right to those numbers and then just sold off right at the close. But folks, kind of similar to the S&P 5s, I would be watching for basically a bit of a range here between 5400s and 5350s. Just going sideways here again would allow a lot of stocks to digest, form high handles, and we'll see those in our individual stocks in just a second as we take a look at those charts. Well, other than that, folks, fact remains that we are in an uptrend. We're just looking for the very earliest signs of maybe a little bit more of a sustained pullback in the market. But right now, the market is behaving nicely. Stocks are behaving nicely. And in fact, if we move over to our external markets here, taking a look at the crude market here, one of the things that we had mentioned to our trading room is be careful here on the crude as we're starting to potentially form what looks to be a bit like a head and shoulders pattern, which is a topping pattern. And if we undercut like these 43s here on the crude, that would also kind of indicate a completion here of more of a resistance level or a supply issue here with this crude inventory. So, folks, we saw in June, July, resistance up near these 51, 52 area. Again, we came up to the September, October period, also hitting highs right around this 51, 52 area. And more important than this overall potential head and shoulders pattern forming on the crude is just the fact that if you take a step back and you look at this on a longer term chart, you can actually see that crude, every time it's gone up to this about 51, 52 level over the last year and a half or so, it's encountered some selling, which means there's overhead supply, there's inventory, there's people who want to sell at that level, and that has capped out any sort of rally here in the crude over the last year and a half. And obviously, if you break down below the 43s, you're probably going to be looking at prices. I would say one stop here is right around the 40 evens and potentially down here at the 35.50s, 36 evens on the crude contract, the WTI. But if you break out of the 5120s, that's going to be a huge break of resistance that has capped out the crude over the last, year and a half. So that's how I'd look at these charts here. Be careful of any break below 43s that could imply lower prices to come. But the earliest heads up that maybe you might be trying to break out, I think would start right around these 49s. Okay, that's kind of the highs from the shoulders of this head and shoulders pattern. And then obviously you got to go and take out these 52s and 51s here up top. But right now we're kind of in no man's land. It's hard to glean any additional information until you get either closer to the 49s or the 43s. Those are just going to be the places to watch in the crude. As we take a look at the gold charts here, gold's still hanging out below the 1200s. We mentioned in prior videos how, right now I think the main goal for the gold would be to try and get above 1200s. That way it can hang on to that major support level. And if we start to trade lower below these 1200 and stay below that level, okay, on a weekly chart kind of zooming out, really that puts the gold in danger of potentially needing to come all the way back to 1050 to find potential support and potential buyers off of previous lows. So just kind of putting that back from a bird's eye view on the weekly charts. Finally here, let's move over to the bonds here. Not a whole lot going on in the bonds. Actually, a slight uptick as we saw bonds here touching off to new lows in the overnight session. But so far here, folks, bonds hanging out on lows. That means yields are hanging out on highs. And it's kind of almost the market, I feel, pricing in potentially a rate hike here as we go into the December Fed meeting. Now, as we move into individual equities, one of the things I was mentioning earlier is how the markets here, as they've gone sideways for like 3, 4, 5 days, it actually has provided a nice opportunity for stocks to catch their breath and form some really nice patterns out there. And predominantly what I'm seeing is kind of like this high handle. So we had some double bottoms out there that have broken out over the last 2 weeks. Now they're starting to form these high handles, and I think it's because look at the Nasdaq, right? The Nasdaq kind of did this high double bottom with a high handle, and that's one of the chart patterns you're starting to see a lot out there. Also, when you look at the S&P, somewhat of a double bottom here coming into the S&Ps as well. So very similar action, and most importantly, over this last 5-day period here, as the markets have gone sideways, right? We saw that here on the intraday charts. As the markets have gone sideways in a range over the last 5 days, what we've seen here is that a lot of stocks have started to form high handle formations, right? Which is nice. This gives us some trade setups out there, and we know how to trade high handles. We know how to trade breakouts from recognizable chart patterns from stocks that have great relative strength. So as we take a look across the board here, there's a lot of opportunities that are starting to shape up. In fact, one of the stocks that we took as a trade that worked out pretty nicely here for a day trade or a swing trade is this ZLT, a ZLTQ. You can see here on this chart how that had a nice little pop right above these 4250s. Okay, ran all the way up to the 4330s. Nice little move there. But again, that's all predicated on this little bit of a high handle that's starting to form. So as you're starting to watch stocks out there, folks, look for the telltale signs of a high handle. And what a high handle really means is it breaks out from the left side of a base, right? So it breaks out of some recognizable chart pattern, has a very strong run up in just maybe 3-4 days, and then just goes sideways. Just how we've seen a lot of these examples, and the market has gone sideways for the last 4 or 5 days. That's what a high handle look like. It really should look somewhat kind of like a flag, right? So here's your flagpole, and here would be sort of the flag portion. And if you kind of use your imagination, what a high handle is, the trade's kind of going back and forth in that area. And that's essentially what that high handle is. Some people call it a bull flag setup as well. But the main thing is that when you're looking at your stocks out there, you're recognizing, some of these higher handle setups here, right? Look at that. And look, another thing that we just noticed here on this NXTM double bottom with a high handle, very consistent with the double bottom and high handle on the Nasdaq and the S&Ps that we've been seeing as well. So folks, across the board, again, while today was somewhat quiet, I think it's a good thing overall for the market to be digesting these gains sideways, because folks, as you're starting to see across the board on a lot of these stocks, we are seeing these chart patterns set up. One final note I just need to make here: we cover stocks here. These are not buy, sell, or hold recommendations by any means. We're just trying to demonstrate what chart patterns and characteristics you should be looking for at any given point in time, and how to deal with certain setups or how to deal with certain chart patterns. Again, game plan always has been to look for the very best relative strength stocks breaking out of recognizable chart patterns with volume. But other than that, folks, hoping all of you guys have a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.